This is the Leadership in Insurance podcast, brought to you by FinPro Search Partners.
Insurance companies are businesses and they need to look for the long term and be sustainable.
We went from 0 to 1 and now it's going from 1 to 100.
Insurance as a concept, as a kind of service, is brilliant. The execution is what we're looking at now. I think the companies that are going to succeed are the ones that are going to understand and master the art of intent. When we talk about innovation, we lean too heavily to think about technology and we don't think about creating a culture of innovation.
I think innovation is essentially continuous improvement of existing processes and platforms and product.
Right? It's got to be easy. It's got to be seamless.
Good morning and welcome to the Leadership in Insurance podcast. I'm your host, Alex Bond, and I'm very lucky today to be joined by Gerard, who's CEO of Alta Signa. Gerard, thanks for joining me again. Letting a behind-the-scenes secret, we met for the first time about 3 hours ago, so this is twice in one day, you lucky man. Thank you for being a guest on the podcast.
Yeah, no, thank you.
No, well, look, as is customary, we were just discussing, it'd be wonderful if you could start this off by just introducing yourself and obviously the Alta Signa business.
Yeah, so my name is Gerard. I'm the founder and CEO of Alta Signa. Alta Signa is a European MGA set up in 2019, now for 5 years in operations and really covering most European countries from their head office in Brussels, Belgium.
Wonderful. Well, thank you for that. Like something we talked about earlier, there's been an explosion of MGAs in the last, been for a while, but particularly a concentration of the last probably 10 years, 5 years. What makes Alta Signa unique? What's your kind of like USP when you approach, whether it be capacity providers or potentially people to join the business?
Yeah, so in my view, most of the MGAs I have seen as part of this explosion have all focused really on technology. So we call them insurtech. My value proposition has never been, Alta Signa will be the next insurtech. What we promised our capital providers, both investment and insurance, was really to give them access to local distribution in Europe. So from day one, we told them we're not going to build a one hub model based in Brussels or Barcelona or Paris and then work throughout Europe. We strongly believe that you need to be in the domestic markets locally to successfully underwrite in Europe. To give you an example, an obvious example, it's not likely that a German broker based in Cologne or Munich will send his submission or insurance proposal to a French insurance company based in Paris. Already the language barrier is a problem. So I'm a strong believer, based on my past experience with the AXA Group and Liberty Mutual, that you need to be in these domestic markets. And not many have been selling that to their capital providers.
I thought that was a really interesting observation. It's something that we talked about. That insurtech model, and obviously it's a big focus of the podcast. Is that? I was going to say maybe that they've misused the model. Do you think it's more simply maybe a misunderstanding of the MGA model, or perhaps the problem that they're solving for? They were sort of solving a problem that wasn't necessarily a priority for the carrier partners. Is that a sort of fair assumption to say?
It's somewhat black and white, I would say, or too extreme. I do think technology is critical today, because when you're an MGA, first of all, my loss performance has to be superior to the market, or my underwriting results, as we call them. My cost base has to be lower, and I need to provide a higher quality of service. Because if I don't hit the three, then some insurance companies will just say, I can do it as well myself, or brokers will just say, why would I deal with Alta Signa? They can't deliver any quality of service. And so I think technology is critical and is certainly an enabler to become successful in Europe, but it shouldn't be a goal in itself. We are still in the insurance industry, so it's still a transfer of risks. And so it's really important that we also look at building a sustainable insurance portfolio. And in order to do so, I think priority number one is distribution, is ensure that you see the opportunities across Europe so you can select a fair share and build a sustainable portfolio. If you purely focus on technology, and then you have no revenue stream against it, or it's specific to one market, one product, one client segment, I think you will struggle. And while 5 years ago, that was a really difficult sell, in particular to private equity and venture capital, because there was this bubble of the insurtech nirvana. And I think today, when you look in the European market, at least, and you look at certain of these insurtech companies, some have filed for insolvency, some are downscaling and making people redundant. So I think there is some adjustment to this, call it enthusiasm about insurtechs. And we come back to a more traditional model where also the underwriting itself, risk selection, access to distribution becomes more important or is critical to any MGA success.
Yeah, it felt to me a little bit that, yeah, they were solving this issue that wasn't there, but it was like, oh, if we can solve the technology, and solve being probably an over strong word, but if we can enhance from a technology perspective, then we can kind of sort of beat the need for the sort of traditional insurance. Whereas what we're saying is access to markets, access to distribution, local knowledge sets is actually the priority, and that's the leverage that the carrier partners are kind of really accessing. The technology is just a facilitator. So if you focus on that, you're kind of actually not delivering on the promise that you probably need to.
And it's
sorry, please.
Yeah, no, and also technology is very expensive.
Yes.
So it requires a large upfront investment, and the return period is not in the next 12 or 24 months. It can take up to 5 or 10 years before you build enough volume on that platform to make your business sustainable. So I prefer to go in there with established relationships in the local markets, build a quick premium volume, and then use your margin to invest in technology. So I think I did it the other way around. Rather than start with the technology and then build my client base, I started building my client base, which gave me the revenue stream, which I can then reinvest in the technology. And I also think there are some, dangers around owning technology. So the IP in your balance sheet, because it's rapidly evolving. And by, outsourcing the IT as we do work with insurtech partners that give us or provide to us the technology. You're far more flexible. It's an off-the-shelf product. You pay a monthly or quarterly license fee. And so it really helps you to reduce the cost too.
Yeah, and definitely
de-risk model.
We've seen some really interesting developments in some of the sort of technology providers. I know that we've worked personally as a search firm with a couple of parametric, what were technology platforms, and their thesis was that we're going to provide this technology platform. Carrier partners can use it, and they can use our unique data to build parametric products. And actually, what's happened is that some carrier partners have flipped round and said, we'll build a program with you, but we don't want to distribute it. We want, because that's actually what they want. So these businesses have now become MGAs that are distributing the product. So the market is kind of speaking like that by having those kind of conversations. And I know parametric is one specific way of approaching a product set, but it's interesting to see that that's happened on multiple occasions that we're aware of. I wanted to talk to you about the way that you're scaling the business, obviously kind of focused on Europe. One thing I'm always interested about multi-line MGAs is, where do you start? Do you come with quite a not hard, but do you come with a defined thesis on line of business you want to tackle? Or is it geography that you want to tackle? Or are you not that prescriptive, and is it a little bit more organic in what you find out in the marketplace?
Yeah, correct. It's not that prescriptive. What we tend to look at is opportunity. So when we started in 2019, we clearly identified a dislocation in the financial and professional lines market. We saw, enormous capacity reduction in that market. So we took that as an opportunity for a quick entry. So we call that a hard market. Obviously, today that turned back into a soft market. So we, didn't put the feet anymore on the pedal. We, de-emphasized that line of business somewhat. And now we are more focusing on what we think is a new growth market in Europe, cyber. So it is somewhat opportunistic. But then also for us, it's not just all about product. As I said before, we believe strongly in local distribution. So geography is equally important. So we are looking, or we recently opened an office in Switzerland as a possible expansion. We are looking at Central and Eastern Europe. Poland is an obvious target or opportunity, we think, if you look at their economic development. So we do both product and really geography, and it depends on the teams we can identify. Also, our risk partners may have ideas about products they would like to launch in Europe. So we're quite open-minded. I would say we are somewhat agnostic and opportunistic, I may say.
That's what's always been a nightmare from my perspective, being a search consultant. I always work with MGAs, and it's always if it's a good portfolio, it's a good team, then we're interested, and it's the lack of definition that's actually genuinely quite challenging. But obviously, you see them come in, and I wanted to talk to you about we talked about this, and I think it's just funny. I told you this story earlier, which was news to you, but we've got this funny sort of crossover in our careers where my first search business I set up about 10 years ago. You used to work at A&B. I know it was on the carrier side, but one of your colleagues was running the MGA platform. And a story of my entrepreneurial career, I said that I barely had enough money to pay my rent. And the first thing that was ever signed off was a retainer to work with the MGA side of the A&B business. And I had to actually ask Killian at the time. I said, "Oh, can you get it paid by the end of the week because I need to pay my rent?" It just makes me laugh that we're talking now 10 years down the line. But back then it was harder to attract good teams and good talent to MGAs. I don't think that's the same anymore. It had this kind of negative connotation that you couldn't get a role within a traditional carrier or a good quality like A-rated carrier. Obviously, insurtech. I think insurtech's driven most of that MGA behaviour. Do you agree that the perception has changed there? And if so, are the things correlated? Is it just this kind of growth of the kind of MGA and the use of the MGA model? I'd be interested to see your observations on that in terms of attracting talent.
I possibly would say that insurtech would not be the driver or the key driver. I think skill is the key driver. Today, you see far more MGAs that are multi-product, multi-country, multi-client segment who employ 100+ people. So the skill, I think, has changed people's perception. And, always remember, Europeans tend to be risk averse. So at the time, they are not known to be the most entrepreneurial people, even if there are some, brilliant ideas. And so I think it's the skill of a dual, of an RSG, an accredited, or a risk point that really made a difference and made the concept of an MGA more familiar in Europe. I think it has to do more with the skill and the safety of numbers than it has to do with insurtech really driving that. But that would be my personal opinion. But you're absolutely right. When you're an independent MGA startup, it's really challenging to attract top talent. That's also why, in my experience, if you have an anchor partner, someone, an insurance company, let's say, based in Bermuda, the US, who's quite keen to diversify into Europe, and he wants to do it through an MGA. I think that can be extremely helpful because you can then have the investment capital, the insurance capital, you have the brand and the fronting. And so it becomes much easier. You de-risk somewhat the execution of a successful, the setup of a successful MGA. And that in Alta Signa's case has been quite a challenge, obviously, because we have separate investment capital from the insurance capital. So we are fairly independent, and that makes it difficult to attract. That made it difficult in the beginning to attract top talent. When you can, I did this twice, let's say in the 90s, two joint ventures, UEP Executive Partners, and then MAG Global Financial Services. The second one was a joint venture, 50% management, 50% AXA. AXA would give their paper, and we would basically sell at that time a relative new product, D&O liability. And that works really well. Everyone knows the AXA brand. Employees have the safety of the funding of the AXA group. And so that's an easy journey. When you start entirely by yourself and you have to raise the capital, first of all, it's venture capital. So you're not going to get the 50 or 100 million. You're lucky if you get $1 million and maybe 5. And then you're in your head, you're like, oh, I go into Europe. I need to plant my flag in all these countries. And you have budget constraints, so you can't really attract people based on salary and bonuses. It has to be through the equity and the potential upside. But that, I agree with you. That's still, if you build an independent MGA, that's quite a challenge. Yeah.
Yeah, I mean, the one observation I would say, I think you're right. And the maturity of these businesses and the bigger MGA models has meant that their comparative roles in terms of compensation structures as well. So there's the equity element, the long-term incentives to be aligned with the growth of the MGA. But the competition around talent means that salaries and bonuses are very strong now in the MGA sector, in obviously the more mature businesses. That does mean barrier to entry is higher now, but it's meant a validation of the model and the skill that we've seen displayed, as you say, in businesses like CFC and RGA, etc. So, yeah, I'm fascinated by the business because I think it's in the US where we do about 50% of our revenue in the US. It's been like a much desirable path for feels like a longer period of time. If you met an entrepreneur in insurance that had been successful, it probably would have been an MGA model that got them there. And I think the carriers view them in slightly different ways, almost like it's a great way of accessing a market quickly with skilled talent, expand that out, and then over time it's likely an acquisition that happens, and that's quite common. But we just haven't seen as much as that, and it might speak to the European ethos on things. What's been your biggest challenge in growing the Alta Signa business? Has anything surprised you, or were there the same challenges you saw coming from the outset?
No, I have to admit, it's the first time I set up an independent MGA where I do not have, as I described before with the AXA group, a proper anchor partner. And so I have to say that COVID has been a real challenge. We were in the midst of raising capacity, insurance capacity, not being able to meet people face to face, shake hands, as you know, is quite important, as most of the capacity will come from the London market or outside Europe. I think that has been a real challenge, learning how to sell your business proposition over a Zoom call. That was a new world for me. Then, of course, when you work for an insurance company, you own your balance sheet, you own the risk capital. To some degree, you can set your own risk appetite. So a big challenge now is that we use third-party capital or third-party insurance capital, and they have their own risk appetite, underwriting guidelines, and finding a compromise or finding a workable solution between what you think you can sell locally in Germany or France, and then what they expect you to seed in business. That's also, I think, an additional complexity that I possibly underestimated. But I'm quite pleased to see today, that we have a sound panel and a loyal panel. So they all seem to, stay with us for, now more than 5 years. So I think at the end, it all worked out quite well.
Yeah, yeah, it was an interesting time, wasn't it? So we found it was it was strangely advantageous for us as a business because I've done work in the US for about 10 years, but you would always lose out to the boots on the ground, and that was understandable because there was much more, it's a face-to-face business. It has been for a long time, and you would lose out, and but the one thing that happened is when no one could travel, then I could compete with the guy that down the road. Although that's now subsequently changed, and I have to be in the US about every 6 weeks. But it was an interesting time to get that foothold. So it's kind of
But it's at
interesting.
all levels, recruitment. So you recruit people you have never met before.
Yeah, yeah.
Brokers. You try and do business with brokers you never ever met before. And so I think it was not straightforward. Also, when you start a company, it's important to build your culture around collaboration, entrepreneurship. And I think the most efficient way of communication is still sharing the same office. Also, in terms of on-the-job training, there's an issue. You just walk into, to someone's desk. You just argue and debate and then make a decision. And it's much quicker, much more efficient, I find, than trying to call someone, trying to set up a Teams call. It's my personal view. So I thought that was a real challenge in the startup phase, not to be able to, meet people physically.
Yeah, and the statistics bear that out. But most successful startups have an in-office culture, like across different sectors. That is backed by the evidence, is to say that and there is a sense of camaraderie. One of the things that's how do you maintain culture when you're bolting on these different teams, and quite often they are coming as like fully baked teams from other businesses. How do you kind of get the kind of culture working together, or do you, or is it important, or can they have their own identities?
Yeah, I just want to build on, or just make one additional statement before I cover this question. Also, one of the challenges we had is that you often identify teams, or teams reach out to you, but then you can't secure the insurance capacity. Or the other way around, you have the insurance capacity. So some insurer says, oh, we would love you to distribute this product in Europe, but then you can't find the underwriters. That also, we missed out on a number of opportunities, which makes our product offering still fairly small. And so in this highly competitive market, I still think that we need to broaden our product offering to become more meaningful to the brokers. So I would say that matching of, underwriting talent and capacity is not always straightforward and can take a long time. And that brings me again back to my anchor partner, when you have at least an insurance company that has the product capabilities, that makes it much easier. Yeah. In terms of building culture by being flexible in terms of work from home and not being in the same location. We do now have, I would say, 3 offices where, we have teams. So they are 5, 6 people, and they tend to go to the office at least 3, if not 4 days a week. So we have Genoa for the marine, Barcelona for the cyber, and then we have the FinPro in Munich. And so I think that starts to work. And then it's up to me to travel on a regular basis and really, engage with the troops and ensure that they understand the company vision, where we want to go to, what the key strategic initiatives are. So it's better than it used to be because we start to build critical mass in the various locations. We just hired a very knowledgeable cyber underwriter in France, so that team starts to grow too. So I think it's all about, it's a short-term issue. When you have a limited budget, you want to put your flags in as many countries as you can, and it's often a 1 or 2 man show, which is also not very credible to the local broker community. But it's a short-term problem. Once you start to build your revenue stream, you can then invest more in people and build proper offices.
Yeah, I think those office infrastructures. I'm with you on this. Having offices,
and it's fun.
That's the other
I
thing.
have no fun at home.
Yeah, no, it's funny enough.
Lucky me, I have a dog, but
I said the same thing. I was having a conversation this morning with one of my team, and they were sort of saying, "Oh, they prefer potentially to work at home a little bit more," and and we were having this debate, and selfishly, I like being in the office. I want to be in the office. I respect people's kind of desire to be different, but I do think it's important. And we've got a fairly new team, and the camaraderie and the point I made was the sharing of information. Information in businesses in any industry is usually quite imperfect, and the things that the classic water cooler conversation that actually is kind of what leads to a resolution quicker it's still very difficult to beat, and it doesn't matter if you're using Slack or Teams or any other kind of form of communication. There's the magic's in the imperfections is my belief. So
and
yeah.
just eye contact. You can see, on a telephone, it's difficult. Okay, people do not call anymore. It's all WhatsApp, but it's really difficult to expressions can reveal a lot, and so I think you lack in terms of communication.
Yes, no, I very much agree. I'm conscious of time, but I wanted to get your thoughts on this because we very much framed the business in its there's a traditionalism in the kind of way that we're approaching MGA, but certainly embracing technology. And I know that you and I had a conversation about you were looking at some AI application within the business. Where is that application coming from? What specific points in the value chain are you kind of looking at AI for a business like yourself?
So we just started the process, and we identified, again, call it a partner. So like we work with insurtech for certain areas, we also will work with AI, with in this case a Dutch AI specialist. And we have this week our first get together, just to explore where we think AI could add most value. But it is quite clear to me that we should focus on the risk analysis, selection, and pricing, and speed up that process. And I think there's enormous opportunity there also to understand your claims database better, to improve your risk selection, because they, can do the analytics much better than a human being, much quicker. So that's where we really focus on. I'm not sure if that's sufficient detail for you, or.
No, there's plenty. There's plenty. I mean, it's giving the tools to do more with less people, and kind of speaks very much to the way I believe that the adoption of AI is really going to impact the thing that I see down the future. And I probably wanted to get on to your thoughts on this more. Was what do you think that means for developing people? Because a lot of that is replacing some of the kind of junior analyst, underwriting assistant underwriter type roles. What do you think that means for developing talent?
A good question. So the way I always defined underwriters, and possibly they won't like it, but I always thought you have underwriters with extremely strong analytical skills, so high IQ, and then you have underwriters who are very strong on the EQ side, so relationship management, sills, basically. And so I thought the perfect underwriter basically has the left side of an Einstein and the right side of a Machiavelli. And that's the perfect person or the perfect underwriter. And so what I think AI will do, to follow that analogy, is possibly we will focus more on the commercial side and less on the analytical side, because we do specialty insurance. So I still believe you need risk management advice. I still believe, the art of the deal remains important. It's people's business. So what you will see is that we will possibly train people more in terms of how to manage your broker relationship, how to make a good deal, and how to build the volume from a commercial perspective. And maybe we will require less analytical skills. So you don't have to do the financial analysis for your D&O underwriting. You don't have to go and check or test the cyber security of this company. We will have the tools for that. So I think you will see a different profile, would be, my vision, rightly or wrong. But yeah, so we will still need people to sell and possibly less people to analyze the risk.
Yeah, I mean that by very nature short circuits some of the training that's required. Yeah,
And then,
makes perfect sense.
yeah, the analytical people will possibly, they will reallocate to the companies that built the AI, and maybe except if insurance companies start to own or build their own AI. But
Yeah. That's a whole half an hour extra podcast, Gerard. So we won't open that can of worms. But look,
yeah,
thank you very much for being a guest. I find it. I really want to have this conversation because I think you've got really interesting history. I think it's hilarious that our history that the cost, and I was looking forward to this. But building, particularly that European piece, and I think we've slightly underrepresented the European market on the podcast as well. So great to have that European perspective. So thank you very much for being a guest on the Leadership in Insurance podcast.
Thank you, Alex. It was an absolute pleasure.
Thank you.